Hey, what's up, guys? Welcome to the channel at DIY Self. In this case, we'll be on DIY Self Trades. If you want to find more trade videos, you can go to the trade link on the tab under my page and find more trade videos. It's been a while since we made a video, so I just wanted to go over some things in the market because, as you know, we are at war, and when we're at war, everything dumps like this. So basically, I just wanted to emphasize the importance in having a risk assessment for yourself. That way, whenever everything turns red and you start sort of freaking out, then you just know that it's okay because I made a risk scenario for myself that if we go down 20%, I can buy that back and then make that money right back. So that's the case here. We hit expiration on this futures. This is S&P futures /MES. Expired on March 20th. So, my strategy sort of entails going off of the 1 hour chart, right? And then buying the oversold conditions and then selling the overbought conditions. And so I can do that all day long, but then whenever a war breaks out, and even here, and then if you don't get out, then obviously then you're kind of going into the negative with it. So now it becomes a situation of like, okay, now I just have to have patience. I have to sit back and just wait it out, and that's what we're doing here. This um, doesn't always update. This needs to be down. Takes a minute to jump down. Sometimes 6703 is where I'm at average down here. So we did have to sell and roll over our contracts um, on March 20th. That was, I was in one contract here and then another here. So roughly at this point, negative 2,800. Not a huge deal. And then roll those over into this, and then we're still headed down. So we're buying them at a lower price, and then a lower price, and a lower price, and eventually, when this starts to recover, this will equal out. I want to see that. There it goes. Now it jumped down. So this is where we're actually at, not up here. 6703. Man, it takes a minute for that to adjust. And that's with fast internet. So, okay, there we go. No, not yet. Anyway, so we're down right now, but the importance of having a risk assessment, right? I mean, the Great Depression, you know, 20-30%. That's what I use as sort of a milestone. Like if it passes that, okay, obviously a lot of people are going to be hurting, but I have 19% here. We're halfway down my risk assessment. If it busts through the bottom and kept going, okay, maybe I might be in trouble. But I could, that's also sort of the importance of having a job, right? So if you have another gig that you can make money from, you can obviously put money back into this as this is recovering, and as this recovers and gets back to a happy median, then you start making money again. So it's sucks that we're like not making money right now. We're just waiting, but if you have a risk assessment like this, you're not going to be crying because of this 4,000. You're just going to be like, oh well, now we have to wait. So it is what it is. I'm halfway down through. We're at like I don't know, 10% loss right now on the S&P. I think I could look that up, but anyway, around 8 to 10%, nearing what we call this market correction. But also, you got to remember, like this is not like anything special. A war broke out, right? Like we went to war with Iran. So I mean, obviously, this is gonna just pumped downward. You see all this red right here, like it just pumped downward. So is they're in the talks right now of settling negotiations and all that. So if we negotiate and we get out of war, this is literally as soon as they're like, okay, we're done with war, you're gonna see this go boop and bounce right back up. So um, needless to say, like have yourself a maximum drawdown. And I've determined this 19% off based off of history. Like, let's see if we go back. Let's go to like IVV, S&P 500. We'll just pull up IVV, which is also down. I've felt pretty good about being in at a lower, like a 3-month low right here. Got a low price on a lot of this, and as it kept diving down, I bought more and more until I'm basically fully bought in. So it would be smart to have some more reserves, obviously. So like I could be like half bought in by here, and then if it keeps going down, then buying more. But for some reason, I just you kind of have a gut feeling, which is not always good to trade with emotion, but like I have a gut feeling that this is just because of this war, and I don't feel like this is gonna be. There's no way of me knowing, but I just don't feel like this is gonna be a long war. It just seems like it's something that how Trump does. It's a thing that he does and gets publicity and gets everybody up in arms, and then it's over with in a few months or whatever. So I just feel like I would rather be in right here anyway. And let's see, so that was a 19% drop back here January. I just did this over a long period of time basically, and what was that, 57% was a big drop. So that can happen, and that's a 5-year period to make that up. So that's a rough drop. That's 2010. That's 2008, the crash of 2008. Took almost 5.5 years to recoup that. And 50% over here too, which is 2000s. And that's part of I think that's what they call the lost decade right in this area. So anyway, yeah, it can go, you can lose 50%, but if you're also trading the hourly within that, you're making some of that back. So the key would be to buy in on this low. Like, don't just be depressed that you lost all the way down this. You got to ignore that emotion and buy at this low, and then look where you would be today if you had bought that low. So I'm using roughly like 20% as my drawdown, just because if it goes below that, like I said, everybody's gonna be hurting. It's not just gonna be me, and I can work on the side and put some money back into the market and just try to buy at the bottom. So yeah, here we are at the halfway down point. If this reaches the next expiration, which is June 20th, I have fully planned to buy it on the other side and ride it back up. I mean, that's just how my strategy goes. You have to, if the S&P, I guess I have this sort of statement that I'm trading by. Like, if the S&P averages 10% every year or whatever over the period of time, and you stay in it, then you're gonna ride that average. You're with the trade. If you sell at expiration and don't buy on the other side, then you're not in it, and you're not even going to get the 10%. So if you're losing, then you definitely want to get back in, so that whenever it does recover, you will recover with it. And if you don't do that, you won't recover with it, and then you'll wait. It'll be back up at its average price, and then you'll be trading on an hourly, just trying to make up what you lost. So it's absolutely part of my strategy to, if it's down here and I sell at a negative, I'm gonna buy it again on the other side because when it turns, you want to be a part of it. That being said, uh, it's I mean, I'm not here to give financial advice, but if you got any extra money, I think now's the time to buy. I mean, it really, like, I'll be buying up anything extra that I have. I'd be buying down here. My lowest ones here was probably at six. I think I bought at 662 on the S&P, just the stocks. So I'm pretty much all bought in, like right here, which lowered my average down to here. But uh, yeah, to be able to get at 639, that's a steal. GV, man, I might get into that if it keeps going down. I mean, this stock just keeps booming. I didn't even know it cleared 900, so I need to be in GV long because it keeps going and I'm not in it. So, mm, Apple, yeah, I mean, I'm pretty much like fully bought into everything right now, except for maybe Microsoft because I'm not really sure what their deal is right now. But um, Apple, right here, my buy band. I mean, it's at an oversold condition on both of these. I'm bought in. Nvidia, all over my buy circle. I'm bought in there. Let's see. Amazon bought in. Everything is like, that's why I haven't really been making videos because everything's just a buy. I mean, Pfizer's still up. I'm still a little bit into Pfizer because it has good dividends, and I was kind of waiting to see if it's going to reach the lower end of this trend. If it reached the lower end of the trend, I was going to buy back some shares, but it's going back up again. So I'll just keep collecting dividends on that one. Waiting for this to recover from this low right here. It'll be right back soon. This is sort of my buy area. So I was able to buy some in here and lower my cost basis, but it's waiting for that to recover. Microsoft, I'm not fully bought in on Microsoft. Maybe it's time. It's at the oversold. I just read this morning that Microsoft increased like 66% of their spending this year on AI infrastructure. So this is part of the reason why they're spending so much on AI infrastructure that investors are kind of worried about that. So that seems to be the massive, the biggest reason for this drop off right here. So I don't know. Maybe it's a good time to get in. I think I'd like to wait and see it turn, and when it starts to turn and starts climbing, then I might max out my shares. But I need to see some of this kind of recover. Microsoft has always been one of those companies that's like it's always going to grow. It's just a long-term investment, just always going up. But with this fall off here, I mean, that's the biggest fall off I've seen in a while. So yeah, I just want to see this kind of be tested and turn around before I get in any deeper. Visa, I think it'll turn. That's a good long-term stock. Royal Caribbean usually has a good season, like it just had, and early this year it pumped up January, February. So I made some off of that, and then I'm getting back in down here. So we're gonna see if it pumps again this summer. But this is a pretty low price for Royal Caribbean, so hoping that turns around. Broadcom's supposed to be, well, they were one of the Magnificent Seven. They made it, I think, and then I think they're kind of fighting for it. So they're hurting now, but if they've made it to the Magnificent seven largest stocks, then this should be recovering. It's like all of AI and technology is just down right now. So we're pretty much just at a standstill. Just try to make money at your job or whatever else you got going on, and keep pouring into this. Um, I one other thing I wanted to mention is that I can make I'm making more off of futures than I am on all these stocks put together. So I follow probably, I don't know, 20, well, I have like 75 on my watch list, but 20 or so stocks right here that I have positions in. And um, go back to this page with the futures. Right here's a futures tab. Everything else is stocks, and I have this one futures tab that I trade. And just for example, in 1 month, I made maybe $3 grand on S&P futures, and then I also made $3 grand on all of the stocks put together. So if that tells you anything, like futures really can amplify your gains or your losses. But to me, it's worth adding futures to your strategy, because as long as you're careful with it and treat it with like respect and caution, futures can really amplify your growth. And I made 5% in January and February. So if the S&P average is 10%, I made half of that in the first 2 months of the year. So I'm really looking forward to just continuing the strategy, continue doing what I'm doing, and then one day when this account gets to a certain size where I can do it full time, I'm just gonna fully rely on this and try to live off of the interest. Obviously, like that's the main goal, right? That's pretty much what retirement is. So that's what we're trying to get to. Um, so yeah, if you follow along this channel, you'll see me just fight for that. And I'm gonna fight for building this cap size. I mean, when I reach, I don't know. I'm trying to think of a goal that I might unlock the because I keep everything hidden right now, because I don't feel like I have a huge account, and I'm not really trying to. But if I have like 100,000 in here or something, I might unlock this and uh, just try to keep it at 100,000 size or something like that, and that way I don't feel like I'm really. I don't want to feel like I'm bragging about it, and I don't want people to think that I have $1 million either, right? So, not a millionaire. I just if this reaches a full time amount where I can live off of it, I'll probably unlock all this to where you guys can. We'll talk about more about buying power and how I'm dishing out the margin and things like that, and using a maintenance requirement in the future. If this continues to go well, we'll unlock all those features and talk about them more. But for now, yeah, I'm just gonna keep them hidden, because life is where it's at. It's hard. It's hard times out here. Everything's getting expensive. Taxes are going up. We're at war, right? And we're having to keep working and all this stuff. So if this gets to be where I can fully live off of it, then we'll go in all the way and let y'all see everything. And I'd like to be able to say that I'm trading $100,000 account, right, and doing that daily, and also living off of that. And that would be the goal. But for now, I got to shut this down and go work, because we're waiting for this to recover. So we'll catch you guys next time. Hope you found some of this informative, and we will catch you on the next one. Thanks for watching, and please subscribe for more. Peace.